Hi everybody, and welcome to the Insights Time with Mike and Rich. We've had a gap of a month with holidays and one thing and another, and apologies for choosing probably one of the hottest days of the year to actually get going again. So if you dialed in live, thank you very much indeed for taking the time. So we're joined today by a subject matter expert, Ian Jackson. Hopefully you can see on the screen. So Ian's from McIntyre Hudson. Ian, would you just like to do a quick intro for yourself, yeah?
Yeah, no problem. Thanks, Mike. So yeah, Ian Jackson. I'm one of the broking directors within MHA Financial Solutions, which is a commercial brokerage wholly owned by McIntyre Hudson, who are a top 11 firm of accountants within the UK. My background is 30 plus years in finance, 20 plus years of that in the invoice finance sector. And we're around to help clients, not just from the firm, but any SME with its working capital and other finance requirements as and when they arise.
Excellent. Okay, thanks, Ian. So yeah, so the subject today is raising funding for and how you fund your recruitment agency. So, Rich.
Yeah. So it's great to be back. Great to be talking all things recruitment and finance. Ian, again, thanks for joining us. You've got obviously great experience within not just the finance sector, but recruitment as well, and financing in general. From a recruitment perspective, in your experience, what are the best options out there at the minute for recruitment agencies to raise finance?
Yeah, thanks, Rich. I mean, look, when you and I've always looked at this with any business within the timeframes and looking at invoice finance or whatever it may well be. Typically, when you look at working capital, you've got 4 different scenarios, and you've got an overdraft facility, predominantly from a high street bank. There's the odd peer-to-peer lender that do that type of thing now, but it's mainly the banks. You've got term loans, and again, you've got the banks, you've got the peer-to-peer market within that now, you've got equity, and then you've got invoice finance. Now, the first 3 of those are defined amounts of money. So you get an overdraft facility, you get a term loan, you sell 10% of your shares. Once it's gone, it's used, then you come up against another problem as to, particularly if you're looking to grow a business, where does the next amount of cash come from? Invoice finance does away with that. Effectively, you've got a facility that can grow with your business. So, if you're looking at starting a business, if you're looking at growing a business, you want flexibility. And you'd probably argue that the first 3 don't provide that. The latter one does.
Yeah, and conversely, if you're using those first 3, with high street lenders and traditional loans, you may be borrowing more than you need. It's not just that you could easily run out. You may take on a loan. Actually, you don't need as much as that. You don't need to be footing that bill. So factoring, like you said, is flexible, isn't it? And it works with your business and it can scale with your business.
Yeah, and the other thing you probably got in the current market is, of course, that a lot of new start businesses, if they were going to a bank for an overdraft or a loan, are probably going to need to give security. So immediately, depending on whether you've got equity in your property, if you're asking for a reasonable amount, which you would be because you're looking to grow a business, then the chances are you've got to put tangible security behind that to support it. Invoice finance, you don't do that. The whole thing is that you are helping mitigate your risks by using the asset of the business.
Yeah, and high street banks generally aren't going to be looking at new start recruitment agencies. It's going to be either too small, there's not enough background, not enough history there for them to even want to talk to them. So really they're going to struggle going down those more traditional routes, which I think is why factoring is really it's perfect for recruitment businesses, particularly smaller independent new starts.
I think there's 2 things in there as well, Rich, and I know Ian will obviously agree with this, but actually people like Ian are filling that void where the traditional bankers, where you had a face-to-face relationship, that doesn't exist now. You'll be dealing with a call centre, especially as a new startup. So Ian, you must find you're giving a lot of advice to fledgling businesses and giving advice that bankers traditionally would have given.
Yes, absolutely. I mean, you say, most of the core high street bank now, you'll go into a call centre, and it's all technology based. So therefore, from that point of view, you're not talking to an individual. You go out into the wider market, and it's about how you position yourself. Yeah, so it's about having done your homework as a new start business. We've all looked at people over the time. Certainly when I've spoke to people in the invoice finance side who are just setting up, and the perception is, well, great, we can do that because we know how much the previous directors were earning when we were working for them. There's a load more things that go behind the scenes. I've gone from working with a large organisation as in a bank, to whilst I'm in a large accountancy firm, there's only 5 of us in the team. And there's a lot more. You suddenly start to realise where your time goes. So you need to be aware of the pros and cons of, yes, you want to generate sales, but what else do you need to do? You need to have something sensible what you're putting together so people understand what you're about, what market research you've done, and then actually when you are talking to whichever form of lender it is, you're in a much better situation for them to actually realise that this is a sensible business to consider lending to.
Yeah, and that really leads me straight into the second point that we noted down was, people want to raise finance, okay, and it might be an existing person that, wants to buy a property estate, or even, look at buying cars, etc., or equipment. What should people be aware of when they're looking for a finance facility and approaching funders, etc.? And what do they need to do to get the best offers? That's the important bit, yeah?
Yeah, so you've got two tracks to that, Mike, haven't you? So if you take what do you need to do, it's, again, be fully prepared. Know as a business what you want. Okay, so if you're going in and going, okay, look, I want to borrow, I need a term loan. How much do you need? Well, I think I need £50,000. But why do you need it? Because I'm starting a business. Okay, but understand why that £50,000 requirement might well be there. Okay, that could be the same whether it was an overdraft facility, and it's the same to a degree with an invoice finance facility. So make sure you've looked at your business. Make sure you understand what you want to achieve in the first year. Make sure you understand what the ifs and buts are. So what happens if it goes better? How do you support it? So you understand your business, and that helps you then understand the people that you are talking to, or puts you even in a better position to actually be talking to those lenders and making sure that they're the right ones for you. That's key. Okay, that everything that people do, recruitment businesses will do the same. People buy people. You win business because of the relationship piece. So whilst you want to understand what they do, biggest thing for anybody to do that is let's say a recruitment business, or any business that is talking to the likes of myself, or even the likes of you guys at Giant, is make sure they understand the jargon we use. It's so easy to get into the jargon, so make sure you really understand what people are talking to you about, and make sure you feel that they can be on the journey with you. Okay, best offer, Mike. Again, that's down to what people want. I would hand on heart say to people, don't get driven by price. Okay, if you go down cheap as chips, then you get the outcome from that. Okay, you will probably walk in and work with someone who isn't right for you, and all of a sudden the whole thing won't pan out as you wanted it to. Work with people that you can build a relationship with, that can give you the service delivery that you need, that can support your business. Again, you're starting as if you're starting as a new business, and you're into recruitment, the chances are most people go into it because they're good at placing people. Okay, so you're good from a sales point of view. You've really got to appreciate what all the other admin stuff is that you've got to go behind that, whether it's from a payroll point of view, whether it's from an HR point of view, whatever. You've got to understand all that and build that together. And once you know what your skill set is, then you build your provider around that so that they can help you go in the direction that you want to go. So best one has got to be the one that fits right for you, irrespective of the price.
And I guess that's where someone like yourself and brokers come in, isn't it? To sort of guide, use your expertise, listen to the business you're talking to, and put them in the best possible position to put them in touch with someone like us, funders who can provide what they need, and make sure it's a good fit. Because that's key, isn't it? You want longevity, I think, in these sorts of relationships. You want someone who can build that relationship and grow with you and allow you to sort of reach your potential.
Absolutely right, Rich. It's all about, we will work with clients and come up with a range of options, and then we'll talk through those options. We'll be with those clients all the way through the process. We'll give them our thoughts on those particular lenders. So we are trying to make sure that they pick the right solution for them, and that is making sure that you know everything about what's going on in the background.
Interestingly, we've spoken all the time there about the people and knowing a little bit about the numbers, at least know what margin you're going to make and why you're doing it. So you're going to be generating a profitable business. And I'd just like to reiterate to everyone on this that basically it's like, you know, so we quite often ask for a little bit of a business plan, but the business plan, the thick ones, don't cut it. One pager which just says, I'm in this market, I know what I'm doing, this is why I can do it, this is where I've come from, actually I know what my margins are, okay, and I know I can make money out of it. That will carry much more weight rather than, there's desktop published ones actually, which you just put your name in and you can just see through those straight away. So it doesn't need to be a big business plan, just a simple one pager, almost like a CV, selling the deal to people, yeah?
Absolutely. Yeah, definitely
yeah.
Right.
And what's the market like at present for funding, etc., Ian? I mean, you know, we're in interesting times, obviously, as we always seem to be nowadays.
We haven't got time to go over the whole general market, Mike, because it's an interesting place to be. But the finance market is quite volatile at the moment. The range of lenders that will want to lend will go up and down probably every other week. So, you know, if you take it, coming back to one of the first things we talked about at the very beginning, if you take the high street lenders, personally, I would find that very difficult if you were going there as a new start business to get any appetite from them. As Mike's alluded to, firstly, you know, you're going to walk through the door and typically you're going to get told that you're going to a call centre. The invoice finance market will always be there. And yes, you will get a range of appetite depending on what's gone on, but it's a market that's been through so many different ups and downs over the years. It's a market that you know, is a secured lender. So from that point of view, it has comfort in what it's doing. So yeah, I've not seen much in the way of lenders changing their stance yet in the invoice finance market. In other markets, it has, but as I say, that comes back to longevity of that market being through several different permutations where lots of peer-to-peer lenders haven't been through what we've been through in the last 3 years.
Yeah. So yeah, invoice finance is, you know, it's long established, it's trusted, it's relatively stable in terms of the asset we're lending against. Good time to review your finance if you're a recruitment agency, do you think, Ian, at the minute?
Look, if you come back to the cause of a business, you have overheads, okay, and an invoice finance facility is an overhead. Now, it's like anything you've got your staff. You're not going to get rid of staff if it's working. If you've got an invoice finance facility that is with the right provider, you've got the right relationship, you're not going to change that. But you need to know, and you should know what your options are.
Yeah.
You know, there are, you know, whilst everybody is still in the market, there are lenders that will be changing their appetite now. You need to be aware of, from a costing point of view, from a relationship point of view, from a service point of view, is it still right for your business? You know, 6 months, 12 months down the line, your new start business will be totally different to what it is on day one. Is that still the right provider? How much are you paying for your services? Okay. And therefore you will constantly, like you will do with any other core overhead, you should be looking at it just so that you're aware of what's going on in the market in case you have to react. So yeah, you know, I would always advise people as a minimum once a year, because typically you're in a 12-month type of agreement, to keep an eye on what the costs are. But if it's not broke, don't try and fix it.
Okay, no, I think that's sound advice.
Yeah.
Good. Okay, look, we try to keep these you know, not too long. We've covered quite a wide aspect there. I think, you know, Ian, you've given us a good insight into the market. You know the numbers. You don't have to do detailed plans, but again, you know, for invoice finance, just demonstrate you've got the character and capability. You know, you will get support. If it comes onto secondary assets and you want loans, etc., then yeah, make sure you're on the numbers and present yourself in the best possible case. Okay, well, that's usually further down the line quite a bit for recruitment agents, etc. So, but you know, again, you know, there's people like Ian, there's people like us around. We're here to help you across the range of options, because you know, clients of ours, we give them a lot of help, whatever they require, and sometimes it's not what we can give them, it's actually pull contacts and providers in. So, you know, don't hesitate to ask. There's a big wide world out there.
Yeah.
Okay.
Thanks very much. Yeah, I think we'll be sending this out for anybody to rewatch, and our contact details will be on there. So thanks everyone for joining us. Ian, thanks very much for taking the time. Really appreciate that. Some great insights there. Have a great rest of the afternoon, and we'll see you all next time.